Price pressure here in South Korea is expected to moderate in the new year, according to the chief of the Bank of Korea back in December. Then what about the country's major economic driver, exports? Will that sector grow big enough to feed the country's economy? Let's turn to Professor Oh Joon-seok this morning. Welcome and Happy New Year.
Good morning. Happy New Year.
Professor, the idea that inflation growth will slow and interest rates will fall in the new year appears to be a widely supported one among many analysts. Are you also on the same page?
I'm on a different page of the economy. BOK forecast 2024, not that bright. It's just a dimmer. Talking about inflation first, it'll be very hard to reach targeted inflation 2%, though the pressure is dissipated. The BOK, jacked up its inflation forecast for 2024 to 2.6% from its earlier expected of 2.4%. It is uncertain that inflation will be approaching its target level, given uncertainties over a rise in public sector fees and other costs. Now, what's going on interest rate? It kept its base rate unchanged at 3.5% for the seventh successive time. I suppose BOK will maintain its current monetary tightening stance regardless of the U.S. Fed pivoting toward lower interest rate within ranges, might be just 1% point ranges. It might seem awkward, but for your health, when you go up, you better take the stairs step by step. But when you go down, take an elevator for keeping your knee joint sound and safe. This is a common saying about interest rate in the market. When it changes into down, it will gain speed. Then what is the right time to take an elevator going down? BOK said it will analyze the pace of the slowdown in inflation, economic downside risk, household debt trend, and moves in other major economies. In addition, finance minister said that the Korean government will closely monitor finance and foreign exchange markets and implement measures in light of the Fed rate decision. BOK dropped growth rate forecast in 2024 to 2.1%. It said it is not yet, and we have miles to go before taking an elevator going down. Protraction of restrictive steps in major economies and weaker than expected recovery in China and recovery in private spending could pose downside risk for Korean economy four times.
That's a fun analysis, too, really easy to understand. Professor Oh, there are still lots of uncertainties lingering, but what we do know for sure is that the U.S. Fed will begin to cut rates this year. You mentioned this briefly, but will such a decision have a noticeable impact on the Bank of Korea's rate calls? What do you think?
Yes, you got the point. According to recent report by Bank of America, expect GDP growth over 1.2% in 2024, 0.6 percentage point above its prior forecast. Unemployment rate over 4.2%, down from 4.4%, and inflation of 2.2%, down from 2.4%. GDP above than the expectation, and unemployment and inflation lower than the forecast. I could draw a more optimistic picture of the U.S. economy based upon the better than expected performances. The fact is that the GDP growth and employment have held relatively steady in major economies facing extreme inflationary pressures. What is more encouraging is the volatility of a global supply chain is to diminish. As cutting wages in the first half of 2024 will help the Fed preserving and then try to pumping the expansion. It might be expected around the middle first half in 2024. I might say around March, it begins to cut down rates. After that, the Fed will likely keep interest rate at their current level, even though inflation is largely under control. Then, as the right timing, it might be the summertime to pump up the consumption. They are likely to cut down 2 or 3 times consecutively. As consequence, mortgage rate will also declining, pumping up consumption as the year goes on. Looking into the late of 2024, overall growth will return to a more stable pre-pandemic rate. Inflation will hover around the 2% point, and the Fed rate will be lower to just below 3%. this will contrast quite sharply with recessionary or near recessionary condition that is in Europe and in China.
Right, and I cannot stress enough how South Korea's economy is heavily dependent on exports. Now, on top of strong exports, domestic spending is also another core factor that drives the country's economy, right? Hopes are high that price pressure will be alleviated this year, but what about domestic consumption? The central bank has voiced concerns over weak momentum in domestic spending, though.
Yeah, that's the problem. Yes, I agree. 2024 forecast Korea could undergo a modest recovery. In more detail, Korean economy is expected to be on track for recovery in 2024 due to rising exports, but sluggish growth looms large as higher for a longer interest rate and sticky inflation. It might be hampering global growth and domestic demand. Korea has faced multiple economic challenges caused by aggressive monetary tightening by major economies to curb inflation and geopolitical risks stemming from the Middle East and the Russian-Ukraine war. Those risk factors still remain in the market, but the economy has shown a sign of improvement in recent months, supported mainly by a turnaround semiconductor industry. Outside demand will be relatively bearable, but the problem is inside the demand. On the domestic demand point, as you mentioned, is a problem child now. Private consumption and equipment investment remains subdued, and then it might be expected inflation trend changes into a declining trajectory as time goes. Now is the problem that the pace of employment expansion is losing momentum, notably service sector or the sole proprietor small shop. Promoting inbound foreign direct investment might be the major solution to getting out of this kind of demand slump. It is, however, true international investors see the same page of the global economy. As a global trade market is not recovered yet, surrounded by prolonged uncertainties, shrinking trade structure still goes on in 2024. I mean that the declining export will be slowed but not recovered completely. Considering both domestic and external economic conditions, Korean economy is projected to see a gradual deceleration in the domestic demand.
All right, Professor Oh, thanks so much for the comprehensive analysis. We appreciate it.
Thank you.